What's up, traders? Weekend edition here, D7, and this is the weekend edition good through March 29th, 2020. What a crazy week we've been in. We had a 3-day surge that brought us up more than 21%. Are we in a bull market? The answer is no. Still in a bear market. It's not how it works. Markets down big on Friday, down almost 3% of the spiders. Nasdaq down 3.4. Same for Russell's 2000. Financials down 3%. Just down. Man, the U.S. dollar has been crashing. Crude oil down 7%. Are you kidding me? The USO at 4.47. Insane. Silver down. Gold down. VIX increasing by 7%. We're at 65.5. Bitcoin at 6,600, almost 6,700. Looking at the spiders as usual. If you follow us, if you haven't started following us yet, hit the little bell, do all that stuff, subscribe. All right, so here's the deal. Just so you don't know, if you don't know, been trading in the live markets 22 years using technical analysis, been doing this a long time, founder and owner of Grok Trade. And this is a beautiful bear pullback. Let's talk about it. Big drop down. There's our bounce. Remember we talked about that in the last video. Things that go down, look for a rally to come back up. This is a traditional bear pullback. We are down below. I mean, we didn't reach even the 50% Fibonacci before we had an inside trading day. Lower high, higher low. Inside trading day. So we bounced up. Again, a nice run to the upside, but relatively speaking, nothing compared to the sell-off that we received here. Okay, very big sell-off. Now we get this big rally. What I'm anticipating is a big sell-off to happen. That is a very real chance that could happen in the markets, guys. Bad news. Okay, this is called a dead cat bounce. This is just a traditional bear pullback. If you don't know what that is, go to freeonlinetradingeducation.com. Go to the chart school. Look for bear pullback. That bear pullback or pullback sell. This is the formation. You see that on the S&P. Here's the Dow, same thing. It rallied higher. This is a perfect area to start shorting. And you may see that. Big sell-off at the end of the day on Friday. Everyone not wanting to hold over the weekend. Bad things. This is the cues. Again, that's a sell-off. This is a sell opportunity to the downside. The Russell's 2000, another bear pullback. Financials, another bear pullback. We had, this is a for you Grok graduates, this is we have a lower high, lower low after a run up. That's our pivot candle. US dollar all week has been crashing and burning. So that's been helping the markets as a whole. It's been helping commodities as a whole. But that's a bad move there. Crude oil just continues to drop, guys. Big bearish pennant after a low, and it's dropping lower. Just not good. That's not good. Silver, up, high base. Look for that to keep going higher. Gold, up, bullish pennant. Look for gold to go higher. VIX remains really high. Anytime you're in the 65 range, guys, fear is high. Bitcoin is a big bear flag. It has a high base right now. The high base is more bullish than it is bearish, but the bigger time frame is a bear flag, guys. That is bearish on Bitcoin. So I want to go back and take a look at the weekly charts, guys. This is the weekly chart on the spiders, and the week is over. We dropped below a major trend line. This week we rallied back, hit resistance, and come right back down. This is bad news. We are down below some just bad areas. Okay, this is really bearish. Really bearish. If I go to the diamonds, same thing. We didn't get back above this trend line. That is such bad news. If I pull in the data, you'll see what I'm talking about. This trend line. This is the Dow. That trend line. We broke it, and it's just bad news. The spider, let me go there, pull in some data. We went from this low to this low. This low in 2016, this low in 2018. We broke that. We can't get back above it. bad news. NASDAQ, if you go there, this is what's so interesting to me. The NASDAQ hit a trend line, and it's a big one, guys. This is the only hope that we have, okay? NASDAQ, we got to watch tech stocks. This goes back on the weekly chart, 2016, okay? February, January, June 2016, major hit, December 2018. And look where we're at now. Right now, that's what we're bouncing on, and we have a higher high. We have a decent chance to have a multi-week run to the upside, technically speaking. When I say technically, as far as technical analysis is concerned, that's what I'm talking about. That is so interesting to see there. Small caps. This is the Russell's 2000 is just in a lot of trouble. A lot of trouble. They give us a higher high. There's a tweezer bottom. If you have a tweezer bottom, you have a decent chance of a multi-week run to the upside. That's what I'm looking for in the weekly. If the weekly plays out like it's supposed to, look for this to run higher. But here's the problem. The daily charts are all set up for bearish plays right now. The dailies are set up for a sell-off. The weeklies are saying we should bounce for a few weeks here to the upside before the next sell-off will come. Financials, higher high. Again, this could be a bounce ready to happen. If I look at the MACD on the financials, we did have a crossover. See the positive tick on the histogram? It's a little guy. It's a itsy bitsy little dude. But there it is. We have a crossover. On the MACD centered oscillator on the histogram, I'm getting technical on you guys, but that is interesting. Can we rally higher? Can it happen? Yes, it can. US dollar on the weekly, we're up, and gave it all back, but we have major support on the weekly. Crude oil weekly is just in a lot of trouble. Silver weekly got back above a major trend line. Guys, that's so huge. It filled the gap, so if it could drop. I'm watching this gap. Silver and gold. If we can keep going higher, gold will break a resistance point. Silver will stay above an area of resistance. So the gold and silver is really important to have a bullish week next week. Next week, we got to end the week and the month very bullish. And the month's almost over, okay? The month is almost over, guys. Let's actually go to the monthly charts. I want to show you something. This is the Spider monthly. Spider, if we go bearish, and next week, the last day of the trading is Tuesday. By Tuesday, okay? Tuesday. This is so important that you get this. Share this with a friend. This is so important. Tuesday, if the Spider closes below 243, if we close below 243 on Tuesday, we are in dire trouble. The monthly chart will have broken a big line that goes way back. This line goes back to 2009, to February 2009. Major hit in September 2011. Major hit February 2016. Okay, so this is a major monthly line. Another major hit right here, January 2019. But we broke those. Let me get to this one. Yeah, it's this one. So this one goes 20, it's October. So it's those two right there. And that's where we're at. If we break that, we're in dire trouble, guys. If we close below this 243 area, woe to the markets on the monthly. Diamonds, let's go there. The diamonds, we're in death territory already. We're below it at this moment. If we don't rally next by Tuesday, we're in trouble, guys. It will have broken just like it broke this line. See how it sold off? If it breaks this one, look for a lot of damage to take place. A lot of damage. Man, you can't. At the end of the video, I'm going to show you something that I was doing some research about the Dow going back 115 years or 105 years. It's crazy. I'll show this to you. the NASDAQ monthly is above. So if the NASDAQ by Tuesday closes below 175, woe to the markets. Woe to the markets. If we close, if we have a really bearish Monday and Tuesday, if it's really, really bearish, guys, bad news. Bad news. Russell's already leading the charge. The chances of this coming back above this trend line are almost zero. Anything can happen, of course, but if it's telling us what our future is, which it could be, the market is toast. A multi-year recession. Bad pullback. Same thing, financials. Financials, it's going to take a big rally to the upside to get above 24 on the XLF. If we don't do that on the monthly, we are toast. Toast. Stick a fork in us. I mean, we're done. Crude oil or US dollar is really bullish. If we stay, even though we had this big sell-off, if we don't sell off anymore, that's going to be a big bullish move for the US dollar. Crude oil remember last month, guys, last month I said we broke this line. That is bad news. And look what happened. Exactly what's going to happen to the rest of the markets if we break those trend lines on the monthly chart. It's going to be a bloodbath. That's what will happen. So we have to be bullish. Those weekly charts need to say, hey, man, we're going to bounce here. The weekly charts need to happen. The stimulus needs to kick in. This signing of the bill. Look at silver monthly charts. It's already right at a major area. If silver shows me any weakness in the next 2 days, Monday and Sunday, or Monday and Tuesday, any weakness at all, that will be bad news on the monthly chart on silver. Bad news. But right now, this could be a major play. We went down below. Buyers came in, went right back up at a major area of support. Look for that to rally higher if we can stay above it. If Monday and Tuesday is bullish on silver, watch what happens for the next months going ahead. Very interesting to see. Gold, same thing. As long as we can stay above this trend line, all is well on the monthly chart on gold. Very, very good. If you look at the fears off the charts, highest levels we had seen, guys. I mean, and the only time we've seen a level this high, and it was short-lived, was 2008. 2008, guys. That's when the financial market crashed. That's what we're experiencing right now in the markets. Just quickly, because I want to get to some really important macro stuff. But I do want to take a quick look at some tech stocks, okay? So tech stocks, if I go there, Apple is a favorite amongst everybody. I have to show you something so important here. Okay, so even though Apple dropped and we come back up, this is a jab. It healed itself. That's pretty bullish, guys. Even though it's a bear pullback, this jab coming up is a bullish play. If we can break this trend line and go higher and break this trend line, the trend line I'm talking about is an invisible one coming down. But if this is good news, really good news for Apple. Watch this. If I go to the weekly chart, we're bouncing perfectly off of a support area. That was huge for that to happen this week. So support. This goes back to 2018, 2019. This goes to 2019 June. Major support here. And that's where we're at. Guys, if we're going to bounce, this is where we're going to bounce. It's going to happen right now. So the weeklies look so bullish to me. If the weeklies falter on the major indices and Apple, the biggest security out there, okay? Well, I should say the biggest equity out there. If this falters, this line, toast. Warning. We are flirting with death right now. I just can't express this enough. I lived through the technology bubble drop. That's when I cut my teeth with the technology bubble. When it popped in 2000, I was treading water there, learning. I was cutting my teeth on that, man. And I learned to be a trader in that environment. 2007, I was seeing October, September, the damage that was happening. And I said, watch out, warning. Bad things. Never would have dreamed we would have had a market crash like we did. But I saw it coming because I wasn't new to the ball game. This time, again, the drop, when anytime you get 1,000-point drop, and now we're doing multi-1,000-point drops. Are you kidding me? That's insane. That's insanity. It's something we've never seen before. This sort of drop is just unbelievable. But our saving grace are the weekly charts. Can we bounce? We need to bounce. We need to bounce. And my energy level that you're seeing here is because I just got done teaching a mentorship class, and my energy level is like up here. So this weeklies need to step in. Weeklies need to win this out because the dailies look bearish. Bear flags look for shorts. But the weeklies are saying we're at support. We need to bounce. The monthlies, if we don't bounce, we're toast. If we drop to close out this month below trend lines, I just can't express to you the future that we have going into the future. It will be a long drop. A long drop. But there is Apple. Apple is the monthly on Apple is a good thing. We went down and tagged that trend line. That's an important trend line we had to tag. If we have a significant sell-off Monday and Tuesday in Apple and we get down below this line, that's the trouble. We only have one other line. But I just don't see that happening. I see Apple being okay. If we can bounce, then the rest of the market should bounce too. It has to. And anytime we're teetering on death like we are now, the markets always seem to heal themselves in the last minute. Sure enough, I expect that to happen going into the future, just based off of past experience. My 22 years trading in the live markets. That's what I expect to happen. I expect where we are teetering on death for us to magically go higher. That's what I expect. So that's what I'm looking at. And if you look here, 10%, 7% on booking down. I'm just taking a look at this. What a horrible. Oh, it's a bear pullback. Let me show this to you. This is the daily chart. This is what the market looks like as a whole. And I said bear pullback. Go to freeonlinetradingeducation.com. Go to the chart scroll and look up bear pullback or pullback sell. That's a great place to short. There it is. And for all you 301, 401 students, guys, look at this. Does that fit all of our parameters? And then that happened. Yeah, we'd be short this already. Look for that to just keep selling off. Anyway, there it is. So a monologue time. Let's get to that. I did some research, and let me show this to you. I just want you guys to see this. See it, okay? I did. Oh, let me see if I can get this right. Bear with me just a second. Yeah. Oh, it keeps moving on me. I'm just going to show it to you. It's a spreadsheet. Now listen, this is what I'm looking for. I'm going to share this with everybody. I'm looking for two groups of people. Okay? Two groups of people. If you want to volunteer and join Grok, Team Grok, if you are an Excel guru and you like to back test things and you want to work with me on a project personally, send me an email at des@groktrade.com. Okay. If you are scientific in how you think about things, back testing on things, if you are proficient at that and really good at spreadsheets, I'm interested in working with you. You'll have to sign an NDA, non-disclosure agreement. We will work together, but it's volunteer. This is more of a fun project. I'm just opening it up to users and followers. If you want to do that, great. Number two, students. If you are a student, a high school student, a middle school student, a college student, if you are a student and you are like jazzed about stock trading, I want to help you. You do not have the money to afford our education, but you do have time and skill sets that might be of interest to me. I'm looking for ghostwriters. If you are a ghostwriter and you have proficiencies and understanding in the stock market, or you like social media and you like to share things on the stock market, hit me up at des@groktrade.com. We could work something out. I want to help you as a student and you can help us with your skill sets and time. All right, moving on. What I did was this is the Dow, okay? This is the Dow Jones Industrial Average. I found a website that gave me the percentage change, annual percentage change on the stock market each and every year going back to 1915. See that? 1915, first year. Now, I want to show something to you. I pulled this a couple days ago. The market for the 2020 is down over 25%. To put that into perspective, the 2008 market crash, we were only down 38.84% on the Dow for the year, okay? For that market crash. We're at 25%, and it happened in a matter of 19 days. Guys, the only time that we were beat by that was it was 1933 when the Depression had the significant sell-off, and that sell-off happened, that bear market, more than 20% happened in 15 days. We did it in 19 days. To put it in perspective. So the velocity of sell-off is insane. What we're experiencing right now is what we were experiencing in the market sell-off, but it's happening so much faster. So much faster. If you go back in time, okay, we're only looking at percentages because the point value is relative to the size. So I don't want to look at that. I want to look at percentages because that holds true. If you go down, 2002, remember the technology bubble popped in 2000? That was only a 6% drop, and then a 7%, and then we dropped 16. 2002 was a really drop, but 16% compared to 33% 2008, right? It's half. You come up here, and we're at 25. And if you go down, let's wait. I'm moving too quickly here. In 81, that was only a 9% drop. The big one in 77. Now, listen, I don't remember this one, okay? I was too young. But that's a big drop off. But look at this 27 and 74. Some of you guys, if you remember this, tell me if you remember the drop in 74. I was born in 73. I'm 46. I was born these days. So, man, the year I was born, we had a 17% drop the very next year. I mean, what a horrible time. Okay, 19% drop in 66. Do you guys remember that? Anybody can remember that? Where you're old enough to actually remember? 11% drop in 62. Let me know what these drops that you remember. A 13% drops in 57. A big drop. And now we go down, normal. But look at this, 39, 40, 41, going into the war, guys. 12%, 15%. Remember, we're 25%. Here's the Great Depression. Look at these sell-offs. It was a horrible sell-off. Horrible sell-off. Oh, I think I said 1933. I think it was 1931. But I can swear I remember it was 33, but maybe it's 31 that we went into the bear market with the biggest slide in 15 days. But just, no one's going to remember that, okay? If you do, let me know. But in 1920, we're down 32, 33%. That's a big one-year drop. Big one-year drop. 21% in 2018. But here's the net in the past 105 years was 836. Divide that out, 105 years. That's an average gain of 12.6% is what you can expect in the markets year over year. That's what you can expect. Buy and hold. If you look at that by yourself, you can say buy and hold works. I'm here to say buy and hold does not work. Why? Let me show you on a chart. If you are a broker and you're telling your people that buy and hold is your strategy and you're going to keep averaging down by buying, you could be sending people to the poorhouse going into their retirement. And I'm here to say you're doing a moral disservice to people. I'm on a soapbox. I can't believe it. And let me show you factually why you are 100% wrong. And listen, you have a job to do. I get it. I want you to understand that if you have time in the markets, if you want to be ignorant to technical analysis, fundamental analysis, psychological analysis, you have that prerogative, because year over year, you're going to go up 12.6% with the Dow. That's your average. Going back 105 years, I think that gives us a good idea of what we can expect. Here's why you are wrong. If you're not a Gen Z or a millennial, you've got to be thinking about something. Let me show this to you. I'm just going to show it to you, okay? Oh, man, I'm on a big-time soapbox, guys. Let me show it to you. You have to see this to believe what I'm getting ready to show you. And I wish I calculated these percentages. Extra bonus points for anybody in the comments that give me these percentages. I will thank you. I just didn't take the time to do it. I just got out of class. I thought, let's just get our video done on Friday night. Let's do it. So if I go here, I'm going to go to I'm using TradingView. I love these charts. I have a link down below if you want to check it out. But check this out. I'm going to go to the spiders because that's more important to me. Now, let's just go to the diamonds because that's what we were looking at, okay? That's fine. Let's just go to the diamonds. The only chart I'm going to look at here is the monthly chart. Let's go to the monthly chart. Let's pull back a lot of time. Now, watch this. This goes back to 1999. There is our technology bubble crash right there, okay? Technology bubble popped, we dropped. Okay, let me draw a historical line. I want you guys to see this. I want you to fully understand what's going on here. This line, I mean, you know what? The S&P is a much better example of this. This is because the S&P is more important to us because there's only 30 stocks in the Dow 30. The S&P has 500. It's a better representation of what reality is. So watch this. I'm going to go here. I'm going to drop in a line. Let's thicken this, dude. Go to settings. Let's make this let's make this a fatty, okay? There's your fatty. If you did a buy and hold in 2000, you dropped down here to 2003. It was a big 3-year drop, okay? Normally, if you're buying going down, you don't have enough money to last 3 years of buying continuously unless it's just deducted from your 401k, okay? Now get this. We rallied back up 5 years, up to 2009, okay? 2008 rather. We're up there, 2008. Here's the problem. You are now at break even. Break even. This happened in 2000. Now we're at 2008. 8 years, you finally broke even. Okay? Broke even. I'm not including inflation year over year, which is 1.5%, 2%. Okay? I'm not even counting that. If you count that, you're not break even. You've lost money. Now let me go further. Now you drop again to. You drop, and you could say, I'm going to keep buying into the drop. If you had enough money to last you 2.5 years, great. Not only, now you drop lower than where you were before. Now your money that you had way up here in 2000 is way down here at this level. Now we rally up. Now we get back to break even in 2013. From 2000 to 2013, for 13 years, you're just now breaking even to where you were in 2000. You just now got your money back. Do you guys see this on the chart? 2000, 2008, 2013. 13 years of no gain at all. For us, this market, you make money 66% faster to the downside. Here, and where we're at right now. You need to know when, at least if you're not going to make money on the short side, at least be in cash. At least be in cash. If you do that, you can make a killing. I shared this in another video. I'll share it now just quickly. The last year I had a job when I didn't work for myself. When I wasn't trading full time. When I had a job at a dental laboratory. That year, there's 2 owners. I grew my account that year by 70%. I grew my account by 70% when everyone made their 12%. They all made 12, made 70. Why? Because when we went higher, I saw it. I saw this double top. I got out. It dropped. I went to cash. I didn't get out. I kept my 401k intact. I actually bought a government bond fund. It's like burying your money in the backyard. Government bond fund. It dropped. And then I saw this W. I'm like, oh man, this is get in time. I got in at that time. When I got into that market, at that moment, I was able to buy at a discount because everything is cheap. So my money that I didn't take a hit on, I had a ton of buying power. I bought a lot of mutual funds. I only had mutual funds. You never want to be in a mutual fund. That is an amateur move. But I'm in a mutual fund because that's all. We're with Prudential. It's all we had to choose from. So I bought the Russell's 2000, and then it rallied back higher. When everyone made 12% for the year, I made 70. True story. So here, the markets, after 2013, we go into this big, massive bull run. We've been running 11 years with some minor little pullbacks. 11 years. We are due for a big pullback. Guys, we are there right now. This has been a fun ride to the downside. I know some of you have been hurt. I do not wish that on anybody, but you can make money being short in the market. At Grok Trade, there's a hedging course. Grok Trade, the hedging course, is one of the courses to the right. Everybody should be taking that in this market environment. Hedge yourself so you are protected in the marketplace. That's a no-brainer, okay? So what I'm saying is, if you, Mr. or Mrs. Broker, are saying just buy into this, you could be setting people up to be in the poorhouse going in to their retirement. That is morally wrong. And it's not because you're being bad, it's because of a lack of understanding. This is why so many of you brokers come to us for education. I appreciate and I respect you guys. You guys are the ones. One of you guys said, one of you brokers, I forget which one you are, on YouTube said, hey, I told my people to go to cash. And I said, contact me. I have not received an email from you because I promised you I would send people your way if you told people and you could prove to me that they went to cash and they didn't hang on to that money. You didn't subject them to that sell-off. You're a financial advisor. You are licensed. You have the power to protect people. You need to learn to do it. People have lost 30% in their portfolio. When they're looking at their portfolios, they're wanting to puke in the backyard. They're drinking Maalox. They're putting Maalox in their cereal. They're eating Tums like candy, like Tic Tacs, because they hate what they're seeing. I'm giving you hope, saying that if you need to learn what these charts do, just learn them so at least you can go to cash. I'm not saying to play the market, get in and out all the time. If that's not what you're comfortable with, fine. Just know when to go to cash. Just know when to go to cash. And then know when to get back in the market. If you could do that, you will be doing a service to humanity that nobody could match. I say that facetiously, but my point here is you will be, at this moment, everybody should be in cash until we heal itself. What does that mean? Can we get above these moving averages on the monthly chart? Can we get a back above them? Can we get a hammer? Can we get a reversal pattern? Can we get our pivot? Can we all the stuff, right? Can we get that? We want confirmation on the volume. We got a centered oscillator here. It's already dipping way below the centered oscillator on the zero line with a big heavy tick negative. Guys, this is the monthly chart, and this is serious business. And okay. I got passionate. There it is. because if the weeklies don't hold up, we are toast. If Tuesday if Monday and Tuesday are bloodbaths, guys, you've got to know how to navigate those waters. If we bounce, it's the best thing that will happen. We could have 3 to 4 weeks of nice upward movement before the next wave down. Before the next wave down. After an 11-year run, if we were going to finally have our pullback, what would it look like at the beginning? It would be a significant pullback. It will drop quickly. Guess what happened? It has dropped quickly. The last few days, we got a nice little pop. That's called a bear pullback. On the daily, we are perfect for shorting opportunities going into Monday. However, if the weekly holds up, so what I could see is Monday and Tuesday or Monday start off bearish, but then by day's end and Tuesday being really bullish. Again, the market has this uncanny ability, teetering on death, to heal itself. We're teetering on death. I think it's going to heal itself. I don't know that factually. I trade what I see, not what I think. So, the next 2 days, Monday and Tuesday, very important to me, and it should be very important to you. Watch those levels. Hope this was helpful. Hope I didn't lose too many subscribers. I hope you understand I'm talking to you because my heart is with you. I know what it feels like to lose money in the markets. Not fun. I'm not near retirement, but I never have to fear that. Some of you, there's a lot of you baby boomers. You have to be thinking about this. This is your livelihood. Don't screw it up. You got one chance. Invest in yourself. Yes, we mentorship. We do mentoring. I'm not here peddling that, but get education from somebody. We're doing, just check, if you're interested, you can find us. All right, guys, that's it. That's all. Take care. We'll see you. Bye.